And Sydney-siders are feeling increasingly caged in as the Victorian Premier calls for a ring of steel around Greater Sydney. It might end up being a ring of steel around Greater Sydney and then another ring of steel around all of New South Wales, as there's now concerns about the Byron Bay area as well as some parts of Western New South Wales. So continued lockdown pressure on the Australian economy is going to become so intense. I think we're going to see permanent damage done to a lot of businesses to a degree that it does impact the overall economic outlook. We've got simultaneous shutdowns now in several states with increasing concerns in Queensland and elsewhere around the country. So in the past, people have come out spending, buying, the new refrigerator, the new TV, the new sofa. We saw, consumer stocks or retail stocks do particularly well, as they should have. But the idea to extrapolate that performance into the future was always a mistake. And I think this shutdown is a very different one in terms of consumer behaviour. I think if there is increased stimulus to the economy, most consumers and households are going to take those funds, and small businesses are going to take those funds and put them away to the side as a safety mechanism. They're not going to go out on a spending spree. One, they've done most of the spending they wanted to do in the first place, and secondly, they're more concerned this time, and probably that's a correct approach and method to take for most households at this point. Not all households are in the position of being financially comfortable, and those that are a little bit close to the edge are going to be increasingly cautious moving forward. And even coming out of the lockdown, we're not going to see such a spontaneous sort of euphoric relief in terms of consumer spending. So the economy is going to take a very serious hit at the moment. It's not going to be that we went into lockdown, but we knew it would end and the economy came out of it very strong. We're not going to have that happen this time. I think that the stock market hasn't at all priced that in to the current situation. Will be a problem moving forward, because I think the market is probably setting itself up for a steeper decline than it necessarily has to have. And I do think that there is the risk that when we come out of the lockdown, instead of a stock market rally, we see a sort of false start and then a stock market that falls back in on itself, largely due to the fact that people will be expecting that same euphoric response from the consumer that just won't be there. I mean, most businesses have invested, expanded their operations, their marketing, their advertising, their investment in new capital. All of this is largely being committed to now. A lot of it has already occurred, but commitments will not be increased coming out of this lockdown the way they were last time. So I think the Australian economy is really, dire straits is too obvious a phrase. I wouldn't say it's that situation, but I think we can expect that the Australian economy will be more damaged than government leaders at both the state and national levels fully appreciate at this point. I mean, family-run businesses, small business in Australia employs 70% of the workforce, and small business is going to be the sector that is worst hit in the current situation. The Treasurer has referred to huge amounts that it's costing the economy every day, but there is a human side to that, and families are going to struggle. Also, in the current framework, there is no extra help for those people who are on Social Security. Yet a lot of those people did earn extra small amounts of income around the place doing other bits and pieces of work, which they're fully encouraged to do, and that helped supplement their social welfare payment. They're unable to receive those funds now. So at all sorts of levels of the economy, there is real pain. But just coming back to that point about the human face of it, there are going to be small businesses that do not reopen after this lockdown, because this repetitive lockdown cycle is going to be a real psychological strain. We know it's a financial strain, but that psychological strain combination And the concern that, well, is the future clear or not, will see many people making the decision to change direction with their lives, and certainly a lot of people just deciding they may as well close their businesses. They had a good run in the previous decade or two. So there is going to be a real hit to the Australian economy, far greater than people currently anticipate. The Australian dollar has been in trouble for some time. It's already fallen about 5%. I forecast it would fall 10%. I'm still forecasting that. So down to 70 cents, perhaps 68.50 if we continue with the lockdowns in an extended fashion, which does look likely. I mean, in Sydney now, there are now 118 or more or larger number of people hospitalised. There are deaths occurring, unfortunately. But the hospitalisations include young people too. And that's the key point here. I think the governments are slightly panicking at the moment because they're concerned that we could be trending towards sort of an inescapable trend to hospitals being severely stretched. And that's not something anyone wants to see. So lockdown is going to continue. I think there's a national cabinet meeting this afternoon, as I'm speaking to you, involving, of course, the state premiers. And out of that, we could be set for a rather stricter sort of entrenched lockdown period for Greater Sydney, perhaps all of New South Wales. And so the outlook for the economy is far worse than the stock market is currently pricing. And if the stock market's trying to look past into the future, well, that future is also diminished. The long-term future is being diminished here, not just the short term. So I continue to caution, as the Australian stock market yet again tests the top of its recent range, that it could be getting tired here. If we break to new highs, it could be a short-lived event if these lockdowns continue. And they do look set to continue. And that's an unfortunate state of affairs on a whole range of issues. But it is something we need to factor in to our investment outlook at this point in time, unfortunately. All around the world, even in the UK now, where they're using a contact tracing system instead of having broad lockdowns, regional lockdowns, it's still causing significant supply chain disruption and the workforce being greatly diminished by large numbers being contact traced to go into individual isolation. So problems are going to continue to occur for some time yet. Is there an endgame? Probably there is. Probably at some point the world will have global herd immunity. Such a scenario is 3-4 years away. In terms of economies coming back coming back online and operating reasonably normally. We have seen that in some European countries. We're seeing it a little bit in the United States, but again, there is risk should the Delta variant cause high levels of hospitalization regardless of vaccination levels. So the issue is not, people want high vaccination levels and it's good to have greater protection, but as I've kept saying, it isn't total protection, and if it leads to or allows high hospitalisation rates, governments around the world, wherever they are, if they see their hospitals being stretched, they're going to introduce lockdowns. And in Australia and New Zealand, slightly different situations, we haven't really had the full first wave impact that most of the rest of the world has felt, and that's why our governments are trying to prevent that massive impact that was seen around the rest of the world. So a slightly different scenario for Australia and New Zealand vis-a-vis the rest of the world. We'll see how it unfolds going forward. But at the moment, certainly lockdowns, I would suggest, far greater economic impact in the short term than people are calculating, and a significant impact long term. Unfortunately, now that seems inevitable and unavoidable. Be careful about being too long the Australian stock market. Thank you very much. Clifford Bennett, Chief Economist, ACY Securities.